Thursday, May 21st, 06:42 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. We're getting much closer to the end of the month. We're already halfway through the month. If you're not situation aware, we're in the second quarter of the year. We're in the second month of the second quarter of the year. That means a lot of information, fundamental information, and price action year to date is already in the charts. By looking at charts, you might be able to think analytically, use some of that common sense, understand what's occurring in the financial markets. Is money flowing in? Well, then prices are going higher. Is money flowing out? Then prices going lower. Supply and demand. That's on the assets I'm going to show you. The major financial instruments. Major financial instruments is very broad. It's not just the stock market. But talking about the stock market, many people that own companies can get their company listed on the stock market. There are different stock markets. They have different requirements. Many of them do not meet the requirement to get listed on the New York Stock Exchange. It has higher ethics and values, such as if the company CEO, CFO had committed some kind of fraud, criminal act, they are likely not going to be able to be either working for that company, or if they work for that company still, have their company listed on the NYSE, New York Stock Exchange. So they go to lower standard stock markets. There are many companies that could afford to go on the stock market, but there's very little demand for their company. That's on many stock exchanges. That being said, why would you invest in a company that sounds great, has a good product, but the demand and the business model is limited how big it can scale up? Give you an example. Airline industry versus the automobile industry. Automobile industry can scale up a lot more. Lower price product, more people could afford it. More people have a basic demand for it versus buying a stock on an airplane manufacturer. That's one example. So compare that to many other things. Compare that to the Amazon that could have food products delivered. And it's a very broad-based company that offers many different products and services versus investing in a grocery store stock. That's very limited how big it can scale up and the products it offers. You see what I'm saying here? So again, investing, some of it is common sense, but again, maybe some people don't apply it. Me, I choose stock indexes for long-term investing, not single stocks. When I say stock indexes, some of them are sectors, and you compare them. Well, now that I shared this information with you, it's not just stocks. I also look at this for commodities, the energy, the metals, agricultural, and then also currencies, as well as fixed income, comparing the best between those. I'll give you an example. I'm going to show you on the charts. Commodities category metals, gold and silver. I've been looking at gold and silver, and then I'm looking at the stronger one. Recently, it was silver, so I took a trade in silver. It was stronger, it was bullish. And then the weaker one was gold. So if I wanted to short, trade bearish, the better one would have been gold. And the better one buying, the stronger one, was silver. Again, most people recognize gold discussed more in the markets. But again, I was looking at the charts. Just show you again the comparison. Leadership, how they change back and forth. Same with energy, crude oil, and natural gas. That's some basic information. Again, a lot of people will include emotions. Maybe they should write things down so make a better decision. Maybe get a whiteboard and write something down in front of you. Make better decisions. And look at the charts side by side. And then walk away, go do a 20-minute fitness walk. And think before you push the trigger of taking a trade if you're investing. So here we're going to look at the broad markets and the futures. The far right grid is the weekly chart, 6 month. The middle one is the daily, 3 months. And the left one is the intraday, 4 hour, 10 days. Now I might change these and show you more time frames on them. But this is just to show multiple time frames, one financial instrument, how I look at things for determining the trend, determining a setup, determining the entry, key levels. Yep, the prices are moving, and it's not even 9:30 a.m. yet. This is the futures market. They trade overnight. They trade pre-market. They trade after hours. Many more opportunities to participate in the markets. With the futures on stock indexes as regular trading hours. So look at the far right on the S&P 500 futures. Last week was the all-time high. We formed that bearish pin bar. I was expecting part of that bearish pin bar to be tested. See this big wick till shadow on top. And look at this current candle here. We're testing it as I expected. So if I'm bearish, I have a better opportunity trading bearish up here than trading bearish on a breakdown here. Because if it breaks that low, and if I trade short, then it might run up and want to do a retest, might get stopped out of a short, might get a margin call, might close a trade for a loser, and then it might continue going higher. So again, timing is important, strategy, taking a deep breath, holding it, heck no. Making a video, we don't have time to play around. Okay, so I also realize down here, that was the low of the year. So the trend is bullish on the weekly chart, looking for retracement key levels to buy. And it's based on how it goes down here and what it tests would determine for me if it's still bearish or bullish or if it's reversing. So here, see this zone here? It's a key level. We're testing it. Yeah, it may not go all the way down here right now. So there's this key gray zone I drew. We might get a bounce off that. Maybe I'll trade bullish. Again, this weekly candle's not done yet. But again, triggers already being formed up here. I'm taking it to the daily chart in the middle. Look at this massive consolidation. All these past days, we had this huge sell-off, big red candle, big solid body, extremely bearish candle after that all-time high. So that big red candle, I was expecting part of it to be tested. And it did. The day after it got tested, then it did a consolidation here, making some higher highs. So this is almost looking like barcoding here. Again, the trend is still up, still doing retests. So midpoint might be the sweet spot being for me to look for that short. Remember I told you here, I was already situation aware of it on the higher time frame. Dissecting it to the lower time frame, I can see more clearly. It has not occurred yet, the entry to trade short on the daily. Okay, but things may occur today. Again, here, yes, see here, these gray zones I have, yeah, they're consolidation, breakout, trend up, consolidation. Now on the 4-hour chart, intraday on the left, all these red areas, supply zones, opportunities to, if it occurs, take a bearish trade first, the green ones, bullish trades. Can they change, such as market situations changes? So, see here, this gray area, and then this gray area, staircase out and lower lows. So I know that current trend on the 4-hour was bearish. And overnight, we tested one of these zones, which was interesting. I'll show you on the 4-hour. Let me open this up a little bit more. Right here, this green horizontal line was a swing point. We reversed with a big, strong green candle. That's bullish engulfing candle, strong. Followed by inside candle, dodgy. Wow. Nice run up. It was a pump last Thursday night, inside candles here. Fast sell-off, no surprise. And then we had this consolidation from Sunday, Monday, Tuesday, Wednesday. Look, we went down here Wednesday, well, Tuesday, and then Wednesday night here. We went down, tested that swing point. Often when we test swing points, we'll see a consolidation. And that consolidation, we're either see a rollover continue going lower or reverse. We had this reverse. Reverse came into a supply zone. Again, there were massive sellers here. Opportunities yesterday. If you're just using the 4-hour chart, sit on hands, wait till this get tested. Take bearish trades overnight. Wait for it to get tested. Take bearish trades. Yep, so this one here, this gray one, this is no longer valid here. I could remove that. That was a minor one. Yep, so interesting how these key levels, when I say key levels, might be the zones or the swing points, get tested, how markets react. So this is one of the financial instruments I swing trade, I day trade, the futures, the options, long-term investing. Yep, this is one of the best ones on the stock ETF. Let's continue on to the next financial instrument. Same time frames, weekly, middle dilly, and the far left, 4-hour. The bond yields, specifically this 10-year one. So again, this is the yields, the 10-year yields, U.S. Treasury yields. These yields correlate with the bonds. Yields go higher, bonds go lower. What do you see here on the far right, the weekly chart? Yields are higher. That means bonds are lower. Yields are higher. That means interest rates are higher on that 10-year bond. If you're a buyer, you earn more income. If you buy those 10-year U.S. Treasury yields, you earn more income. The person selling to you has to pay a higher interest rate for their debt. That means the United States taxpayers are paying more tax income just to pay the interest on the debt. So current situation is here. We're making an all-time new high for the year this current week. Last week made the new high. And this week, look at the far right grid. We already broke above. Continue making new highs on the 10-year yield. And we also took out a quick key swing point here, that blue line. And that last week was a strong bullish candle. Big demand came in. So some people, some countries, some hedge funds, some institution funds, some pension funds that are invested in currencies or stocks, because those are, again, very volatile stocks and currencies, rotate out of their currency positions, their stock positions, and they buy fixed income products such as this one. At least they know solid what interest rate they're earning. Yep, so there's bigger demand coming into these because the interest is higher. That's dangerous for certain currencies because dumping currencies hurt certain countries. And if the country's central bank starts dumping their own currency, that could weaken their own currency. Yeah, such as Japan. So that's an opportunity because you could trade short. You could trade bearish Japanese yen. Okay, to buy U.S. Treasuries, you have to take your currency, buy U.S. dollars, and then U.S. dollars buy the Treasuries. That would make bullish bias the U.S. dollar. We get to that momentarily. Look at here, the daily chart. So we're already making a lower low. See this inside candle? And yesterday made a lower low. So there's a reversal. Again, look at here on the far right, the weekly midpoint, that big green candle. I'm expecting some part of this to maybe be tested for opportunity to reload. Then here in the daily chart, again, big green candle here, already got tested. That red candle tested it, continue going higher. So I'm looking here also for further opportunities. See if we have a deeper pullback for reloading. And the far right, the 4-hour. Yep. Massive consolidation up here. That big red candle sell off. So maybe a short-term bearish trade on a retest up here, which is now, look at this overnight here, consolidation. And big green candle up here gets done at 9 a.m. So expect, as I'm expecting again, somewhere here to be tested for opportunity to trade bearish. Yes, here you see this red candle in the middle, daily bearish. And on the bullish opportunities, look some of these key levels down here. All these things I'm showing you have stock ETFs. They have better spreads and better liquidities than investing in airplane, car companies, grocery stores, home builders. Yep. Now, some of those products might be okay for a scalp swing trade because some big event is about to occur. But I prefer to pass on those because, again, their liquidity could dry up real quick. They could get delisted. They could get halted. That's high risk. You might be right on your, what's that word again? When some speculation on where you think the price is going to go. But if the company gets halted on the stock market and delisted, you can't trade on that. So again, I'd rather be on something that's much more stable. Well, again, I'm showing you some key levels, key financial instruments that are. All right, let's continue. Let's go to the next financial instrument. The US dollar. The weekly chart on the far right. Here's the high of the year. Last week, strong big green candle. Extremely bullish. Down here, consolidation. And I've been bullish the dollar recently. Again, since part of it was since during this war that started. There's been a bigger demand of the US dollar for multiple reasons. Just like I told you, for the higher interest rates, people convert their currencies into US dollars. So that's been helping US dollar too. So big, strong move on this US dollar. Have areas labeled where I was looking to reload. And look, we're currently testing this supply zone. I wouldn't want to be buying up here. Opportunities to be looking for bearish trades. The middle chart, the daily, we have this gap that has not been filled yet. So that was a target place. I was looking for a target for opportunity to either close bullish trades or maybe take bearish trades. Yep. So here in big imbalance area down here, looking for opportunity, maybe trade bullish. And we have big wicks down here, sellers up here, but we still haven't completely filled that gap. Wouldn't be surprised we'd get there before the close of Friday. Could be a swing trade, buy it today, close of Friday if we test that. Yep. And on the 4-hour chart on the far left. So down here, we haven't tested this. Nope. I was hoping we would have already tested it for me to reload or buy bullish positions. Hasn't happened. So again, not taking any trades yet. And here, consolidation. These highs getting rejected, but still making higher highs. And then yesterday I saw this huge sell-off, which that huge sell-off, when that occurred, that had a huge impact on the commodities, the metals, and the energy. The energies went lower, the crude oil, natural gas, again, because commodities price in dollars. So it gave opportunity, if you're bullish, those to be looking for bullish trades. So now I'm expecting as it's occurring, we're going to retracement, we are, and possibly opportunity to trade bearish up here. So if I trade bearish the dollar, I could either use the dollar instrument, trade bearish, or I could look at the euro and trade bullish. Yep. Buyer stepped in here too, big. Let's go to commodities now. The category, energy. Look at the weekly chart on the far right, making a higher high, higher low. A little body inside, almost forming a doji up here. So history shows summertime demand for crude oil goes higher, gas goes higher, demand. Also have hurricane season coming that has people start speculating on other directions on energy or individual energy. Might be looking at rig Just to give you an example, because the hurricane seasons, I rather trade again crude oil, not the individual company stocks. The middle, the weekly, yeah, I told you the dollar sold off, had an impact on the metals and commodities. The commodities, metals, and energy. So we have this daily chart here in the middle, that swing point right here, I've labeled. Been testing it, buyers stepping in. Again, if you're bullish, I said if bullish, metals or energy, look at those key levels. Well, we've been testing this since yesterday. The swing point buyer's been stepping in, opportunity to be buying bullish positions. Me, using options, buying bull put spreads all the way down here. And the intraday 4-hour. So again, I showed you the swing point here in the middle chart. And on the 4-hour here, demand zone, buyers stepping in. More label down here. Yep. And today, huge reversal. Again, this 4-hour candle's not done till 9, but huge reversal. Did you hear? I'm bullish metals, I'm bullish energy, and I'm buying on the pullbacks. Let's go to the metals now. No, let's finish with the commodity energy. Sorry, natural gas. I'm bullish natural gas. I still got positions. Actually, I've been closing them for profits. Okay, that's a good thing when you're doing options on credit. Time decay is your friend. Look at the weekly chart here. Yep, here's the low of the year. Huge reversal, bullish engulfing candle down there on the lows. And the trend went up. We're above my demand zone, demand area. So I'm not looking to add here. Nope, just taking profits in my current positions. Forming a bearish pin bar up here. That's fine. So if it pulls back, I'll be reloading at key levels. There's a war. And the demand for energy is high. And also the speculation is causing more volatility. Again, I'm not looking at short energy. I'm looking at buy bullish on the pullbacks. Key levels. The middle chart. The daily. Look at these consolidations. Breakout. Staircase pattern higher high. On the daily chart here, we're doing a consolidation. And I have a key level down here. Maybe we'll get tested down here for me to be buying. My strategy, I use the stock ETF UNG. I trade options on it, and I sell puts for credit, earning income. 70% option traders do not do that. I think it's like 70% of option traders fail too, because they trade directional on credit. Sorry, on debit. You don't know much about options. I explain that well in my option videos. What I do is considered contrarian, I believe. And the far left, intraday 4-hour. Since we broke above this key level, we did go higher. Rejections rolling down and buyers stepping down here. I'd rather wait and see a pullback and buy at some lower prices. Yep. This is a phrase some of us know. Never buy on tops. Never short on the bottom. Depending what time frame you're using. So I use multiple time frames to see how things are occurring. I am not shorting up here. I'm buying on the pullbacks. And let's take this to metal commodity now. The metals, gold. Trend is down on the weekly. And look, now we're in this demand zone, the bottom of it, opportunity, and buyers already stepping in down here. And I'm anticipating this would get tested. I don't know when. It takes time. And we could reverse before we even test this. We could go higher and then come back down here sometime in the future. Again, I told you I was more bearish gold and more bullish silver between those two. So I was looking for a bullish trade. I saw silver stronger. So I took the silver trade instead of the gold. On bearish trades, when I was looking at the gold and silver, I was seeing again the gold more bearish than silver. I hesitated. I didn't take the bearish trade, which I regret because gains, profits, should have done it. My silver trade, when I took it, I had gains run up, and those gains, I should have closed it for profits because I thought it was going to go higher. I had small gains, should have closed it, still in it. I'll decide tomorrow if I'm going to close it or not. Yeah, no, Friday. It's tomorrow. So, here we are on the daily chart, the middle chart. We had this consolidation here, the trend down. Yesterday, we made a lower low, lower high. See these big wicks on the bottom? Buyers are stepping here on the dip. So I'm speculating we'll get some kind of retracement on the upside. And key levels I'll see if and when these get tested, what kind of trade to take. This is gold. But again, I'll be comparing this with gold and silver. Look at this chart side by side, determine which one's stronger, which one's weaker. So if I'm bullish, I'll be looking again which one's the stronger one for me to reload on. Versus if I'm bearish, I'll look at the gold and silver side by side and decide which one's more bearish to be trading bearish. And the 4-hour chart on the left, we never made it up here last night. This is the demand zone. Last night we did here bearish pin bar. So yesterday, again, there's a round bottom, strong move up near the end of yesterday, and higher highs overnight. Now we're in here demand zone, buyers. So I might be taking on bullish positions today or tomorrow. Maybe I'll add. So that's how things are going right now. Yep. Let's take it to silver. Weekly chart, bearish pin bar last week. Look at this again. Consolidation here. This big red bearish pin bar, big tail on the top, shadow wick. Bearish stop hunt. Opportunity to, it didn't occur, was looking for this midpoint to be tested on this big wick for me to take a short. Again, it hasn't tested here yet. But we did break below that red candle last week, so now the trend is going down. If you understand what I just said here, that was a bearish stop hunt on that weekly chart. I had a bearish strategy set up. It didn't test it, so I never took that bearish trade. And I showed you, or I mentioned, shared on one of the other financial instruments a few minutes ago that, again, some people trade bearish as soon as you break below here. I'd rather wait for that retest. So again, it did do a retest in here, but not as high as I wanted. But taking into the daily chart, look at this. The past several days of last week, huge sell-off, these big red candles, extremely bearish. Again, this is silver. Came down into this demand zone. Still showing bearish signs. And we went here and tested that, rejected that one too. So metals are more bearish, where the energies are more bullish. Dollar goes higher, some commodities go lower. But again, supply and demand, fear. Again, another reason the energies are staying high because of fear. So the market makers could have the prices higher, make more of a bonus maybe. And the far right, the far left, the 4-hour. We're down here in demand zone. Buyers been stepping in. And these key levels up here, I prefer to trade short. And on the bottom, I prefer to be buying if I see the patterns I'm looking for. And we'll take it to the last financial instrument for those that want to see Bitcoin. Crypto. Here's a big consolidation on the weekly. They broke it out to the upside on weakness. And big rejections up here. Look at these big wicks. Inside candle, no surprise. Weakness, which again, we filled this gap up here. That's all it did. It ran out of energy and dumped. Yep. So this week it gapped down from the inside candle. No surprise. Look at this on the middle chart daily. Massive distribution up here. Smart money selling. Some smart money was already selling here. They had another run up. More distribution, smart money selling, and it's declining. Again, you see that minor gap there. On the 4-hour chart, again, rejections up here. And this morning selling off. So that's how things are playing out. This is the 1-hour chart of the stock index futures. Far left, ES selling off this morning, NQ selling off, YM selling off, and the Russell 2000 selling off. Again, stock index futures, they're selling off. And we'll put this on one more 1-hour futures. Different financial instruments. Show you comparisons. Some basic information there. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching. Thank you kindly for your support.